most of the metals are headed for a weekly decline, but crude prices are headed for a weekly gain into the markets there. The manufacturing data from China has been positive. Markets are expecting the US manufacturing numbers also to show a gain, and that really has been supportive. There have been encouraging statements coming out from OPEC as well, and there are those statements from Citigroup as saying that the US is on its way to become self-sufficient. And if you look at the US average daily output for 2012, that is expected to be around 14%, which is the highest in 6 decades. So lots of news reports, analysis really coming in on how much stockpile does US have and where would it really end in next 5 to 6 years in sense of consumption and supplies as well. If you look at the base metal space, there has been a decline into that one. In the last 1 month, we have seen most of the base metals really do well. Copper prices have gained by nearly 7%. Something like a lead is up nearly 12% in last 1 month. So that's pretty much how the place has reacted to the strong Chinese data and the numbers coming in from US as well. But Barclays, there's a report out from Barclays, and they are suggesting that rally may really have been outdone in case of the metals, and they would really start or suggest shorting of metals if this rally continues. Some bit of an uptick is what you are seeing in the precious metal space as well, while gold is still trading at 1 week low, still below that 1700 mark. But the point is, as the physical market really has seen an uptick in sense of demand. Also, there are concerns about the US budget deadlock, and that is something that really is keeping the investors quite wary on whether to invest money in that space or not. But otherwise, gold prices are up nearly 9% in this current year. How do you trade all of that then? For that, let's listen into Chirag Kawani for his strategies for the day today.
Copper prices are looking bearish in the short term. Till the time prices are trading below the key resistance level of 452, prices can again move down to test the level of 430. If we look at the short term move of copper, there was a sharp fall from 460 to 416 levels. The corrective pullback from 416 is again facing resistance at 48 levels. I think so. A short term top again has been formed at this level. One can look to take shots around this level with a stop loss above 452 for a decline till 430 in the short to medium term. Crude prices have been consolidating on NYMEX in the range of $85 on the downside and $87.30 on the upside. This looks like a short-term bottom is being formed over there, and the prices could head higher again till $89 or $91 in the short term. One can look to buy a January month crude contract around the levels of 4715, 4700 with a stop loss below 4650 closing basis for an upside target till 4930.